Hello everyone! Today we're going to talk about the US stock market, specifically about Amazon shares. But before we get into that, let's remember that in the previous video we discussed Tesla, and let's take a look at what's happening there. Let's switch to daily candles. And on the daily candles, here's what we see. Here we have a drop with a gap due to poor earnings reports and car deliveries. This happened on July 24th. At that time, I said that opening a short position at this point was not the right move. Why? Because as a rule, these gaps tend to get filled. And in just 2 days, we saw a complete gap fill. We were given a good entry point for a short position. Still, the company's situation is more bearish, I would say. And I recommended placing a stop on this short above the red candle from July 21st. Accordingly, the movement continued only downward, and it is still ongoing now. And what does this tell us? This tells us that you can either move your stop to break even at your entry point or place it above all the moving averages if your entry was a bit lower. In other words, above the moving averages is the best option because if your stop is just a bit lower, your position could get stopped out. So what are the targets? Well, the nearest target is the 100-day moving average, which is around $297. And for longer-term targets, you can check out my video about Tesla stocks. Now let's move on to Amazon. The situation with Amazon is quite interesting and, in my opinion, not as complicated as with Tesla, at least at first glance. I haven't looked at this chart in great detail, but still, take a look. In February, we saw a bearish engulfing of the January candle, and after that, the decline continued. For 2 consecutive months after that, we kept falling, setting new multi-month lows each time. Already in May, we engulfed the April candle. Just as a matter of fact, both the opening and closing, everything you can think of, and set the next growth target. And the growth target is the beginning of the decline. In other words, the level of $234, $235, which is basically where we are right now. You could say that the growth, which started in May, has reached its target level. Now pay attention, if we now update the all-time high for this stock, most likely the RSI will not reach a new high and will get a divergence on the monthly scale. And that's very significant. Nevertheless, for now, there isn't a single reason to talk about short positions on the monthly candles. Let's move on to the weekly chart. What do we see on the weekly candles? Well, basically the same thing. Here, the growth continues, and there's not a single reason to take a short position. Open a long position? Well, I wouldn't risk it, to be honest. You should open a long position during a decline, when the stock has dropped significantly and there are reasons indicating a trend reversal upwards. So for example, during this decline, where did we have such reasons? They appeared on this candle, the candle from April 21st. Why? Because the candle from April 7th did not engulf the previous falling candle, which means it was a sideways movement. And here on this engulfing pattern, it was already possible to try opening a long position, but again, not at the candle's close, but at least from its midpoint, which in fact is where the price returned. Right now, there are no reasons to open a short, but the entry point for a long is very questionable. Let's switch to daily candles. Nevertheless, the picture here suggests that most likely there will be a new all-time high. It's not guaranteed, but it's more likely that this will happen. Let's look at the daily time frame. What do we see on the daily candles? There's a unique pattern on the daily candles. The stock price is rising even though for 5 consecutive days we've had red daily candles. In a sense, this doesn't even indicate market weakness. It shows that every time people try to sell the stock. The day closes in the red, but that doesn't stop it from rising. Each time it opens with a gap up, and for now it's still going up. So when can we talk about a downward move and the potential to open short positions? Only when we see an engulfing of this candle from July 24th. Until that happens, we just have growth, which is a bit unusual, but it continues on the daily candles. Where is this growth headed? It's headed toward the area of the all-time high, around $242 or higher. But again, I wouldn't risk buying from here. You're buying near all-time highs. That's not right. That doesn't mean the stock can't shoot up into the stratosphere. It can. But buying here is not the right move. Let's look at shorter time frames. 4 hours. Maybe there's some kind of reversal forming here. The situation here is almost identical to the daily candles. Here's a candle that, if it were engulfed by a red candle, could have reversed the market. But even here, there's nothing like that. But here, there is a clearly pronounced divergence because here's one high with its RSI in one area, and here's a second, higher high, but the RSI is already lower. So the 4-hour candles indicate that the risks of a decline are quite apparent here. But there is no entry point for a short here. Right here and now, there is no entry point for a short. Look, here there was some kind of high, right? Here's its price value, about $223. Then we get a higher high. Here it's already 224 or 224 and a half. And what happens next? Next we form a divergence, but the price pulls back a little and then continues moving upward. That's why right now I would be looking for a short entry point, but there isn't one. I've explained to you how to look for it. The stock is more likely to continue moving toward a new all-time high. And that's where I would be very attentive because a quality short could appear there. Again, stick to the rules I mentioned, always manage your risks and set stop orders. See you next time. Subscribe, leave your comments and give likes or dislikes. Next time, we'll probably take a look at Bitcoin, which is currently trading at $117,828. We can switch to its chart for a moment. And I have to say that the previous video mentioned we were in a sideways trend and absolutely nothing has changed. That is, Bitcoin is capped at the top by the level of $119,841 and at the bottom by the level of $117,420. I want to remind you that there is an unfilled gap on the Chicago Mercantile Exchange in the area of $114,000, and this acts as a potential magnet. I would say that Bitcoin currently has a slight but still present tendency to move down toward the area of $114,000. And right there, take note, is also the 200-period moving average on the 4-hour candles and most likely the 50-day moving average on the daily candles. No, the 50-day moving average is actually lower, around the 112,000 mark. In any case, trade carefully. See you in the next video. Goodbye.